And we have to find ways and means to simplify GST, make it good and simple for the steel sector. If it is made for steel sector, then I'm sure our infrastructure, our construction, our railway, our automobile, our machinery all gets easier and easier, and real meaning of good and simple tax will come into the picture. We are discussing two broad components which we are having challenge in steel sector: power cost and GST. If I look at steel sector, which is contributing 2% of GDP, 7% of industrial output, and collection GST from the steel sector is around 50,000 crore rupees. And we have seen the steel sector, the basic, the product which we are manufacturing is the raw material for infrastructure, construction, railway, automobile, and any infrastructure without steel is incomplete. And even Government of India, Honorable Finance Minister has made capital outlay of 11.11 lakh crore rupees in recent last budget. So in terms of growth for the steel sector, which is basic raw material for the infrastructure, quite obvious we will grow and grow faster. I was hearing former Secretary, Ministry of Steel Industry. He was saying that if GDP is growing, then steel sector is growing by 1.7 times. That is what he said. If that is the case, look at the way steel sector has got the opportunity to grow faster and faster. But why all we are discussing this GST and power cost? Of course, I will touch base power cost little later, but from GST perspective, yes, indeed, GST was the biggest indirect tax reform since independence. 2017, GST got introduced. Multiplicity of taxes gone, cascading of taxes gone, double taxation gone, and in GST truly become one nation, one tax, one market, one law, applicable from Kashmir to Kanyakumari. Now the announcement in the 9th year, Honorable Prime Minister on 15th August 1779th Independence Day, he said next generation GST 2.0. And he talked about three broad pillars: structural reform, rate rationalization, and ease of doing business. Under structural reform, what is being envisaged, that classification dispute going to be minimized, and wherever inverted duty structure means when your GST on inward is higher comparing GST on outward will get minimized. And rationalize the GST rate. We are having rate of 5%, 12%, 18%, 28%. Now rationalized to only 5% slab and 18% slab. So 12% gone, 28% gone, 28 now converted into 40% special slab for sin and luxury goods. But what is the impact on steel sector? Whether our rate got rationalized? If you look at tariff heading 72 to 81, are most of the product under 18% slab and remain under 18% slab. So from rate perspective, we are not finding anything different. Nothing. But what are the challenges we are facing in GST for which we all are looking for the solution? That in our industry, metal scrap plays important role. Basic raw material for manufacturing of semi-finished or finished goods. But this metal scrap supplier are coming from unorganized sector. And they do not want to come into GST 8. AIIFA has represented this subject matter, and effective from 10th of October 2024, reverse charge application was implemented. So any registered buyer purchasing from unregistered supplier metal scrap falling under tariff heading 72 to 81 under reverse charge. We as a buyer, genuine buyer, honest buyer, need to pay under reverse charge. And these measures are being taken to done away fraudulent ITC. I do not know what is the meaning of fraudulent ITC, but I will touch base some of the point which is challenge for the steel sector. And second component was TDS. Even in B2B supply, a registered supplier supplying to a registered recipient, there would be 2% TDS to be deducted by the buyer while making payment to the supplier. And government has given argument that they are going to catch hold of the transaction. But my humble submission would be in B2B supply, it is already being captured. Why you are creating 2% implication more? Ultimately, to that extent, of course, the supplier will get credit in a e-cash ledger, but to certain time period, your working capital get blocked. So these were the two major taken in October 2024. What I was thinking, and I'm of the opinion which is representation from last 2 days discussion. We had one session pre-lunch and we were discussing what are the challenges we are facing in GST perspective. Challenge number one, now my learned colleague from DGTS is sitting next to me. Maybe I'm conveying this message to him and he can take it forward and convey it to the CBIC and GST Council as well. What is the challenge for the registered recipient and buyer age today? Their transaction of 18, 19, 19, 20, 2021, department is disputing the credit on the pretext, on premise, the supplier registration gets cancelled with retrospective date. Why supplier registration get cancelled with retrospective date? Reason cited, he is non-existent. And his registration is getting cancelled with retrospective date, and then department disputing and saying, buyer, you will not be given credit. Coming to the another problem, that we as a buyer can see immediate supplier only and his compliances on portal. Whether my immediate supplier filing 1 and 3B or not. But I can't go beyond my immediate supplier. I can't see preceding supplier compliances. And just because preceding supplier is non-compliant or he has taken the fake registration, only filing 1, not filing 3B, but look at the position of buyer. Buyer can't see preceding supplier compliances. There's no portal available. And credit is being denied to the honest and genuine buyer. Third situation, kindly allow. I'm having 2-3 minutes more. I know that when you're picking up your microphone, allow me to communicate, because unless I communicate, we will not come to know what is GST, which is bottleneck for steel sector today. Third is section 16, subsection 2, clause C. You as a buyer, registered buyer, paid the amount to the supplier, to registered supplier. And registered supplier has not deposited the tax. Credit is being asked to be reversed by registered recipient. He has already paid. And if he is being asked to reverse, it's a double taxation. And it comes with interest and penalty. And under section 74, alleging it is a fraud. What fraud I committed? I paid the amount to the supplier, and supplier is known to you. Your department has given GST registration. Why you are not catch holding registered supplier and coming back to the buyer? Now I'm coming back to the proposition, what we can say and what would be our takeaway as a way forward. My first takeaway would be, when GST rate is being rationalized from 18% or 12% to 5% for all necessary goods, then in our sector, steel sector, my submission would be metal scrap belong to the unorganized sector. An 18% GST rate. If it can be reduced to 5%, It would be helping two-way. First of all, taking it down to 5%, unorganized sector will try and tempt it to move to organized sector. Point number one. Point number two, for government, there would not be loss of revenue. For simple reason, metal scrap procured by the manufacturer for semi-finished goods or finished goods. They will manufacture and pay GST at the rate of 18% on value addition. Ultimately, government has collected the 18% which they are looking into. So there is no loss to them. So maybe when the government has come out with the GST next generation 2.0 and steel sector is the basic need for the infrastructure, maximum capital outlay in our budget is of 54 lakh crore rupees, out of which maximum coming for capital outlay infrastructure, and infrastructure cannot be complete without steel. You know, cement, housing for all, for infrastructure, 28% GST was there, reduced to 18%. So government has worked on and they are working on. So maybe this is the first suggestion which I want to pass on. Second suggestion, when department is disputing credit in the hands of buyer, recipient, please ensure buyer is having all documentation, invoice, eBay bill, LR copy, bank payment, 1 and 3B status of the supplier. Just because supplier is non-compliant, you are having all weapon in your hand, the way you are catch holding my neck, buyer neck. You can go back and catch hold of neck of supplier. Unless you make supplier compliant, GST will not get the real meaning of good and simple tax. It will get the meaning of good and simple tax only when supplier become compliant. At the end of recipient, he is being penalized for no reason, and that is the reason it is hue and cry in the steel sector. Coming to the third and last, because I know Mr. Khaitan is looking at me, I said, say in brief, but I'm extending further, maybe 2 minutes more. Last one would be, from AIIFA, we are willing to come forward. If steel is the need for the infrastructure, we need to be listened. We need to be heard properly. We are not looking anything beyond GST. Within GST, if something can be simplified, my only submission is under section 16(2)(c), where I made the payment to the supplier, and you have introduced new system IMS, invoice management system, wherein supplier is filing all the invoices available to the buyer. Buyer can accept, reject, keep it pending, or no action is deemed accepted. If on IMS, recipient has accepted the invoice, which becomes liability for the supplier, because moving from 1 to 3B, then quite obvious supplier is going to make the payment, 1 and 3B to match. If invoice level payment is being made, then department should make sure they will not dispute the transaction that you have not received the goods. It is a fake transaction. Otherwise, purpose of IMS will not be there. Invoice management system, third one. And coming to the last component, power cost. Coal. Of course, my friend rightly said, 5% plus 400 rupees per ton compensation cess. It is now 18%, no more compensation cess. But the problem, the coal fraternity is now saying, what happened to my compensation cess? If compensation cess is not way forward applicable, then credit lying with you is of no use. Now, I've seen coal becomes important for power sector and generation, either by outside party or captive consumption. There are two categories of coal available, lower grade and higher grade. Government has given some number. For lower grade coal, your power cost will come down to 17 paisa per kilowatt. And higher grade coal, you may have some slight plus impact. But to my mind, coal is the one of the subject matter which we are discussing from GST perspective. But GST per se for steel sector itself is a task. And we have to find ways and means to simplify GST, make it good and simple for the steel sector. If it is made for steel sector, then I'm sure our infrastructure, our construction, our railway, our automobile, our machinery all gets easier and easier, and real meaning of good and simple tax will come into the picture.